SPDas, the trading floor is yours.
All right, thank you, Igor, and good morning and welcome back, everyone. Please excuse me, I've got a bad throat and a bit of coughing due to weather change here. So, excuse me for that. Just looking at I was just looking at the pattern while you were addressing, and the pattern 3 years back, and what it is appearing right now, and it looks quite similar, quite a bit similar in the sense that we've got a lower degree wave one, and wave two is we had an expanded flat last time. It's quite possible that we have an expanded flat this time as well. But it's just a comparison. It's not necessary. So coming back to the larger degree count, it's five waves up, uh, and wave four was a neat little triangle, and that thrust wave five also perfect according to the books, followed by a three-wave corrective decline, all at a minor degree, bouncing right at the 61.8%. So it has taken September 2022 through January 2025, almost 2.5 years for the entire structure to complete. Not necessary, but normally it takes the same time for the upside targets to achieve. So if not 2 years, at least for 12 months, we can say 12 to 18 months, we can say that okay, this trend would actually go and continue and print new highs or higher highs. I'm saying at least 18 months because wave C are very powerful and they carry more momentum along with them. That's why. So having an idea about what Europe could be doing in the next 12 months gives us a strong trade potential. I mean, we haven't seen a decline or a debt in a single trade in the Euro USD specifically since the 13th of January, that particular low. Of course, we got tipped out once when the noise came and it took us out possibly. That happened both in euro and the dollar index. But since 13th January low, we haven't seen any debt in the euro USD trade setups or trade calls. So now, looking at the wave structure of the first euro, then we'll touch base with dollar index and pound and gold. And there's another candidate, very strong candidate, that's a dollar JPY. We have not touched that till now, but maybe we can touch base today or from Monday onwards. So it is. I'm pretty confident about this wave one. That is around 85 to 90% probability of high confidence. The wave one is in place. Now, when wave twos are considered, when we are in a corrective phase, I always keep on saying that uh, there are at least four patterns of a corrective phase, uh, standard patterns of a zigzag or a flat or a triangle, and the fourth one is a complex pattern in itself. It's called a combination. So whether it's a combination or a double zigzag, because the first pattern, if give me a moment to explain, is a clear zigzag. That's an A, B, C. It's a 5-3-5 pattern. So we can easily conclude that okay, that was a larger degree, one larger degree wave two. What we are seeing right now is again a possible 5-3-5. So this could, if I remove this one and two for a moment, this 5-3-5 could be another ABC as well. All right, and that if it is another ABC, and if wave two is still digging, it's taking its own time, then we are going to see at least another three wave decline or a five wave decline, because that will be a 3, 3, and 3, which will ultimately be a WXY. So it's going to be a combination. So there are a lot of permutations and combinations now coming up. And why I'm disclosing right now, or why I'm discussing right now, is only because of the RSI. I am seriously not convinced about what this RSI is showing up. You see that peak, it was in tandem with that peak, no problems at all. That low was in tandem with the RSI low, no problems at all. But from here as well, from this peak was assigned to the peak on 11th of February. And today we are 14th of February. Prices have rallied, at least it has made four highs. All right, you can see that it has made four highs. And the RSI has, in fact, just declined. It is just touching base right now, or catching up right now. This indicates the correction or the corrective pattern is not done yet. All right, so that's the wave theory explanation of euro. So be prepared, please. If euro uh, would 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 produce a three-wave corrective pattern lower, that would be another ultimate chance to get in on the long side. We are already partially longs. I've always said that keep booking partial profits. If you have that system of closing partial positions, that is a perfect way to trade euro, dollar index, and pound right now. Always have at least 20% of equity on the long side. All right, and please give some time for yet another three-wave decline. I'm reasonably convinced that it is quite possible for euro to produce a three-wave decline at least. That's going to be another 535. And you never know if we are going to see two more waves such like this one. If it is a triangle unfolding. And because we are in mid-February right now, the trends are almost set, they're normally set up in the initial part of the month, 3rd February. So if the trend is set up, it would have gotten already in business. But after 15 days or after almost mid of the month, we are still not very much convinced about the RSI, which is actually lagging behind. So there could be another three waves lower. This would be another opportunity for bulls to go long again or traders to go long again. So please be aware of this situation. I'm not saying this is mandatory going to come. We are well poised on the north side, and all buys should be utilized as opportunities to go long. And we are not suggesting any shorts either. The only thing we are suggesting is keep partial profits, take money, keep taking money out of the desk, bring it back home, leave some equity or space or leverage to go long on a corrective decline. I would not be surprised to see 1.0375, or so it's 5060 kind of a zone, or 5070 kind of a zone, where when we can get this slightly higher. You never know if it's a way, it could be a running flat, it could be a combination, or it could be a triangle as well. All three patterns are open. All right. So having said that, trading point of view, please hold on to your long positions partially with a stop around 1.02. Also, keep an eye on a pullback. 1.0350 zone is a good place to re-enter on the long side. And if we see prices declining towards 1.0300 or 20 zone again, that would be a very optimized place to enter. I'm going to get rid of the trend line here. And it looks like, okay, let's test out with the Fibonacci. I like doing that very much, just to see if the Fibonacci also matches up with the price up there. All right, maybe Maybe not yet. Euro might push higher towards the 530 zone. It could push higher at least towards 530 zone to match up that Fibonacci. Not necessary though, but be prepared if it goes higher. I mean, it's your choice. You can take some more profits, but be prepared for a corrective decline to enter again. Bottom line, Euro bulls are absolutely in control, and there's no reason why we should remain or initiate shorts. Let's forget about initiating shorts for the next several weeks. Buying on dips is absolutely a call here. And stop loss right now it stays at 1.0200. All right. So thank you for your time. It was important to explain what the waves could be taking shape in the next few hours or so. We don't know if there is any fundamental noise coming up in the New York session, but there could be. It could act as a trigger. We only look at the chart patterns and it is already priced in everything. The same outlook applies for the dollar index. I mean, I can really, if you look at the chart as one, that spatial intelligence view actually gives. I mean, we are quite convinced about this impulse wave one, and then if you look at this rally, that's a zigzag, ABC, correct? 535. It's a perfect corrective pattern, rallying all the way towards 109. But if you look at the right hand side now, it is also a potential 5-3, I don't know, 5, yes? That makes it as a potential ABC as well, because 535 is an ABC as well. And you never know if there is going to be another ABC up there. It should not take us as a surprise. That's what I'm trying to explain in terms of the waves, because wave one and then wave twos, when specifically when a trend is resuming or trend is beginning to cut loose on a particular side, like euro is wanting to accelerate north and dollar is wanting to accelerate south, and it's all beginning to happen. The second waves are tricky waves. They take time to build up. They take their own time to build up momentum. All right, and always remember, dollar has been on the forefront for the past 4 months. It has been rallying for the past 4 months. Psychologically, so that for those 4 months were an excellent period for the dollar index. And suddenly 5 waves lower. Psychologically, the bulls will not like it. The dollar bulls would not like it. Okay, the game of support and resistance or the game of psychology, they would always try and come back strong. Okay, somewhere here, they would always come back and strong and try to check, try to see if there is any further buying interest or not. And once they fail doing that, they failed it here, they might retest. It's an emotional game actually. So they might come back to retest if there is a further buying interest or not, and another unsuccessful could trigger a huge decline. Okay, so that's it's very important to understand the story part of the psychology as well. Because just being on one side and then being surprised may not do good for our trading as well. That's why I always keep on saying, one, find the larger degree trend, which we have found, it's on the south side. Remain short always, but keep booking profits, small profits. Maybe not completely, but small profits. I have a habit of doing that personally as well. Right now, we've got limit orders actually in place, which are still not triggered. But I'll keep an eye on a New York session and would again enter on the short side. And second, keep an eye on the other side, sir. It always it always picks up turns. I don't know how, but it always does pick. It has the capacity to pick up the turns. Now, if you look at the RSI from from this price where the low was, and there's a new low, a significant low, we can clearly see that. The RSI is not significantly lower. It's still above the previous low. So that is a bullish diverging scenario. I mean, traders might be taken as a surprise just momentarily. I'm not saying the trend is going to change, but selling at this point, we are not recommending. Buying euro at 1.0485, the current price, we are not recommending. So if you want to enter fresh in the dollar index or in the euro, got to wait for a correction. And a good place to enter is again 108 zone. Somewhere around 108 would be always good. If you can manage to pick up 108, 40, 50, that would be best. All right, so stop loss for the dollar, stop loss for the dollar index would go around 109.85. Uh, it's better to place it at 110.30, but at least 109.85. All right. Okay. Can pick up pound as well, but the same story applies to pound as well. The one good part is that we can see the structure very nice and neat in pound, and it's possible that the third wave might have already begun, because if you see that rally, if you take this as first impulse wave, if you take this as the first impulse wave, one, two, three, four, and five, and a zigzag corrective. You see, can you see the subwaves? One, two, three, four, five. One, two, A, B, C, and then again one, two. That three, four, five was a gap down. So a zigzag A, B, C, and then a neat little wave one, wave two that has gone up above that previous wave. So it could be another wave one of a lower degree. Possibly, if you see a corrective decline somewhere around this price, around 2465, that would be a very good entry. 2465, sir. All right. And why I'm saying it's not a good idea to buy at this price. First of all, it's a very logical thing. I mean, you are the highest price right now. You don't buy anything at the highest price, correct? Even if you go to uh, if even if you're purchasing a simple thing as grocery, you would want to see if it's the correct price to buy, not the highest price of any, or if any commodity. You would want to wait that price to come down to get into the long side, correct? Same applies to trading as well. You don't buy at the highest price. Specifically, when a new high is in place, the bulls have scored a point. Again, remember, we are coming up with the educational stories very well, very fast. So they've scored a point, and after scoring a point, they normally pull back. So the pullback would possibly come to a 50% or a 60% zone, which is 24, 50, 60 over here. That would be a nice one to go on the long side again. But tell you what, this guy is neatly poised for a correction and a rally thereafter. All right. So the direction is going to be on the long side. The only thing is we're not recommending right now, but on a corrective decline towards 2450. Okay, the stop loss at least 2250. That would be at least 2250, and it's better if you stay at 2100, even better. All right. Okay, so that is the story in pound, and we can go further. It's a nice structure on the daily chart as well for pound. You see that? The charts are coming up slowly, but that's okay. We are only interested in the recent wave. Now, if you look at the wave over here, it's stalling at 61. I'm not saying it's not possible for pound to continue higher from here itself, but typically, if that is wave one, that's a three wave decline, wave two, here's a three wave rally wave. So it's wave A, that could be wave B, and you never know, wave C may come back very strong lower, back towards the 2400 zone as well, to, to get that bottom very strong and then pick up. Because with experience, I can say that on the RSI front, what we are seeing is an extreme level right now, which doesn't really convince me on the charts that prices would really continue higher from here itself. There you are. This is what I wanted to show you all. I think this RSI peak was somewhere on 11th of February. And right now we are 14th of February. At least five highs have been print. And on the RSI front, you can see the divergence here. It's not closer to previous high, 11th February. And that's why let's allow this RSI to settle around the 30 mark again, and we'll buy it further. For those who are holding long positions, no need to do. Positional traders have nothing to do except just sit tight and enjoy the journey until 2800, 2850, and above that 1.3. All right. Those who are wanting to enter fresh, yes, there is some time. We've got to wait for a corrective decline now. Gold is really testing the resistance zone right now. We are still quite a bit convinced about the five-wave decline on the hourly chart. I bring up once again. If that five-wave decline has been correctly identified, I am not plotting the waves, but let me just do a larger degree count here. So if that is wave one impulse, wave two, ideally wave two cannot go beyond that wave one. So it is either going to turn from here, or it's going to confirm another pattern, and then wave three, four, and five would suffice on the south side. But this corrective rally has taken a bit too far above that retracement of 88% as well. I'm not saying it's not possible. It's absolutely possible for the second wave to go that deep. In fact, I've seen gold major trends are formed when wave two is just about $1 or even 50 cents away from the top or bottom of the first wave. So it's not that it's not possible what we are seeing on the chart, but the only thing is that it's only three points left now for the previous high to strike. It's 42, and we are very close to 39 now. So if the reversal has to happen, it has to happen now. Otherwise, it's doing something else. There is a we miscalculated the wave story here. All right, any push above 42 will eliminate the bearish view, at least for the time being. All right, so have we recommended stop around 55, but if you want, you can bring it down a bit tighter to 50, but at least stay away from the noise. Don't keep it at exact at 42, 43, just in case if there is a noise, you get stopped out, and then again prices will decline. Okay, 15 minutes is not a really good time to watch the RSI. Let's now this hourly chart is it's showing a diverging scenario already, but we've got to see the price action confirmation. Maybe we'll have that in the New York session or no. Time will tell that. All right, we are holding shorts with a stop around 29.55 right now, with a potential target of 28.30 at least. for now. There you are, 28.16 and 27.40. Gold always tests patience. Bitcoin, we've taken profits of the desk on the earlier position that we took on the long side. Once again, please keep an eye because that's I mean, you can hold on to the trade actually, what we did last time, but I'm just drawing a trend line here. It's not exactly a trend line, but it's a dropping triangle possibly, or whatever you can say. We got to see a break above that line and back into the buy zone. Otherwise, structurally, it's good to remain long. If we look at that wave count, this is what we have identified last time. That is the first lower degree wave up, corrective wave 2, and if it's the third wave, we should be seeing a rally materializing at least towards 100,000 or 104. But your stop loss should go around 94, just below that 94 mark, around 93. Be careful though. I mean, it's not a bad idea to book small profits at this time. We've done that and we'll look out for another decline or a corrective decline and try and re-enter around the same price that we did, uh, I think, last session. All right. But a clearance of 98 over here would certainly instill further confidence that bulls are poised towards 100,000 and 104,000. Right now, we have taken partial profits. We have taken positions of the long. We accumulated some 800 points or 1,000 points. I don't exactly remember. But positions have been off. We are waiting for a corrective decline, but we'll try and match up the support here to enter again. All right, that's the short-term target, 100,000, 104. But please have your stops tight at 93. All right. Okay, so that's the story for now. And once again, thank you for tuning in. We'll be back again at New York session 2 at 9:30 a.m. Eastern. Until that time, once again, thanks for watching and good luck to your trades. Back to you, Igor. Thank you very much.
Thank you, SPDas. It's always a pleasure.
Thank you.
ForexLens gives you the edge. ForexLens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. ForexLens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with ForexLens. Check out our performance at ForexLens.com. Get the edge on trades. Your eye into the markets. ForexLens.com. ForexLens gives you the edge. ForexLens understands the global economy and financial markets with